Hi and good afternoon. On behalf of HC Andersen Capital, I would like to welcome you all to this presentation of the Q1 2024 report from SKAKO that was published last week. My name is Rasmus Køjborg, and I have the pleasure of welcoming CEO of SKAKO, that's Lionel Giraud, and we have CEO of SKAKO also, Thomas Petersen. They promised to take us through the quarterly numbers here and also the highlights here from the beginning of 2024. So a warm welcome to you too. And before I hand over, also a warm welcome to those of you who signed up for today's presentation. As usual, you can ask your questions in the chat, so I hope you will do that, and we will address the questions either during the presentation or afterwards. And of course, we'll record the presentations here and upload it on different platforms afterwards. But with that, I'll leave it to you, Lionel and Thomas, please.
Yeah. Thank you very much, Rasmus. And I'll start, as always, the presentation. Welcome to all of you who will participate today and spend 13 minutes together with Lionel and I, and of course, HC Andersen, looking into the figures for SKAKO for first quarter of 2024. In general, we experienced a decline in the revenue of 4.5%, but due to the improved margins, we actually succeeded in maintaining our EBIT. That was just a short intro, and then let's jump to the presentation. The agenda is like usually, SKAKO at a glance, then we'll go through the results. Lionel will go a little deeper into the continuing business, and then we will end up looking at the guidance for 2024. If we look at SKAKO, after the divestment of concrete end of last year, we have three customer segments left. That is recycling, minerals, and fasteners. We provide industrial know-how and best-in-class vibration equipment. We are now 115 employees, and the headquarters is still in Faaborg, and then we have the main offices in Strasbourg and in San Sebastian. We have increased the number of shareholders with approximately 4% compared to the last presentation that we had a couple of months ago. So now we are 2,088 shareholders, and the board of directors and the management still holds approximately 33% of the shares. In brief, we have good figures. We have improved figures all the way around, even though that the revenue has gone down and the order intake is a little lower, then we are satisfied with the figures due to the fact that we actually deliver on our EBIT before special items, 4.6 million, compared to the same last year. Then if we jump into the P&L, then as you can see, our margin on EBIT has improved by 0.4 pp to 7.8. We maintain the 4.6 despite the decline in revenue on 4.5%. I'll come back to the to how and why the revenue has decreased with 4.5%. If we look at the revenue, then we can see that the plant sales has decreased by 9.1%. On the other hand, the after sales has actually increased with 7%. That gives a total revenue declining with 7.5%. If we then go deeper into those figures, then we can see that revenue from recycling is actually increasing by 1.7%. That is still low, but it is an increase. The two other segments, especially fastener, has been impacted negatively by the Easter, which has been placed in Q1 in 2024 compared to Q2 in 2023. Then fastener has also been impacted negatively by destocking and also a hesitant decision from customers. So that has actually given us a decline in order intake on 40%, and the revenue in this customer segment has decreased with 25%. This decrease is, as we see it, temporary, and we see also, due to the strong pipeline we actually have in this customer segment, that most likely this will increase again after 1 to 2 quarters. Revenue in recycling, as I mentioned, up with 1.7%, and order intake in this customer segment has actually increased by 20%. So that is actually above our midterm targets, where we look into a growth a little smaller than this one. Then if we look at the margins, both on gross profit and on EBIT, they have increased, both of them being improved by 0.5 pp on gross profit margin, and EBIT margin has been improved by 0.4 pp. Then the order backlog, even though that we have a smaller or decreased order intake, then the order backlog end of Q1 2024 has increased by 7.2% compared to end of 2023. So even though that the order intake is lower, then we can see that the order backlog is actually increasing. Then if we jump to the balance sheet, then we can see that SKAKO is still a asset-light company, and our asset has decreased by 5.5% to 211.4 million Danish kroner. We also succeeding in decreasing our net debt to 4.9 million Danish kroner compared to 18.8 million same quarter last year. Then if we look at adjusted cash flow from operations, then it is minus 4.0 million Danish kroner compared to 2.4 in the same period last year. The negative cash flow is due to that we have increased our inventories and then to secure delivery on projects and to secure parts being delivered. Then if we go to key financial ratios, then we can see two of the main key financial ratios. ROIC has increased by 66.5 pp, and that is, of course, if we look at that, impacted by the divestment of concrete activities in 2024 due to the fact that ROIC is based on a 12-month period. Net debt is still very low, 0.2 compared to 0.6 in the same period in 2023, and that is way below our normal guidance on 2.5. So that gives us the space for future acquisitions if we find some that actually support the strategy that we have, and of course we can also have the leverage to pay out dividends. Then if we look at the capital structure, then we paid out a extraordinary dividend in February at approximately Danish kroner 39.4 per share, amounting to 122 million Danish kroner. We paid out the ordinary dividend in April on 5 Danish kroner per share. It was the same as in 2023. That gives us a dividend yield on 4.9 based on a share price end of 2023 on 103. And then if we look at the share price, then we can see I have put in the numbers end of 2022, 68.6, end of 2023, 103.0, and then end of first quarter, 81.5. But on top of that, we should also realize that we paid out an extraordinary dividend on 39.4. And that was what I wanted to highlight towards the key figures in the quarterly report. And then I will hand over to Lionel, who will take us through a deep dive.
Thank you, Thomas. Yeah, we'll start with a short description of the customer segment of SKAKO Vibration. And the first one of this segment is mineral. This is the historical segment for SKAKO Vibration, and it remains the most important segment. We say that we help our customer to sort and clean raw materials to enable their best use of in the mineral industry, and this segment include the mining sector. It include as well the sector of the construction with the quarries and sandpit, the iron and steel industry. We have a lot of very good reference and a very, very strong reputation in the steel industry when the steel is not already made in the steel process. So when our customer use a raw material, and it represents in the last quarter 42% of our revenue share. The second segment, which is a smaller segment, it's a fastener industry. That's an industry where our customer and the user of our equipment makes a little metallic part like screws, nuts, this kind of small metallic part. We are the leader in Europe of this in this very small segment, which represents 15% of our revenue. And this sector of the industry is linked to the automotive sector and the construction sector too. And the last one, the third one, is the recycling segment. In this segment, we say that our equipment sorts and clean waste resource to enable their best reuse. It represents nowadays 35% of our revenue share, and it includes a lot of sub-segments, so which are very, very different one from each other. It could be the glass recycling, urban waste recycling, metal recycling, paper, plastic recycling, slag recycling. So it's a very diversified segment. I will continue by a short description of our main location for the company, and a short description as well of our range of product. So as Thomas already said, we are mainly located in three different places. The first one is the headquarters in Denmark, in Faaborg. The second one is in Strasbourg in France, very close to Germany. And the third one is in Spain, in San Sebastian, in north of Spain, very close to France actually. And each location which have the capacity of sales, design, and production is one of the expert center of the company in one of the segments. So in Denmark, that's the expert center of the fastener segment. In Strasbourg, that's the expert center of the mineral segment, and in Spain, that's the expert center for all the group for the recycling industry. And on the right side, you can see some sample of our range of product. In our competitive landscape, we have one of the most large range of product. We are able to make very small product and very large product. It means product with small capacity and product with very, very high capacity. And we say that our product move, separates, and wash bulk material. So you can see different product made by different entities of SKAKO Vibration. It can be Spanish, Danish, or French product. We consider ourselves as a positive impact player mainly due to our strong development in the recycling segment. Originally, our revenue share for the recycling was lower than the current 35%. But we made acquisition end of 2019 of SKAKO Dartek at this time, but now it's SKAKO Dartek, which is a company which was very strong in the recycling segment. And in addition to the knowledge and the product that we made the acquisition with Dartek in the recycling segment, our product coming from the mineral and fastener can be used as well into the recycling segment. So we are a company which can play offensive on the recycling sector compared to other company which sometimes has to play more defensive. But we can say that by nature nowadays we are in the mega trend of the green transition due to this development we have made for the last year in the recycling segment. Yeah, in brief as well, I would like to talk a little bit about this journey of the last 3 years. When we made the acquisition of SKAKO Dartek, it was end of 19, mid of November 2019, and the company since acquisition has doubled in revenue. So it's a very strong success for us. And what we can say that we show on the left part of this slide is that most of the revenue came from the Spanish market, and Spain represent only 5% of the global European recycling market. So we know that it's a huge opportunity for us to expand that model all across Europe, as you can see on the chart here. For SKAKO Vibration in general, for the last 3 years, you can see the figures that we had in the revenue that we had in 2020. On top of that, you can add the revenue of Dartek when we made the acquisition, and then the growth made by Dartek, and of course the organic growth of SKAKO except Dartek. So in total, we have an increase around 50% for the last 3 years, mainly due to recycling, actually. Few words about the recycling market. First of all, we believe that it's a growing market, and it's mainly based on what we call that 3 pillars. The first pillars is the incentive made by the government all across Europe. So there are few figures in the slide, but we know that there is this European Circular Economy Action Plan. We know that the waste generated will increase by 70% by 2050, and that there are some target for municipality to increase the recycling of the waste to 65%. All of that represent a lot of investment that can be seen as well in the private sector, which is a second pillar. Those massive investment. For instance, from 2014 to 2023, there have been 136 billion euro which have been invested in recycling companies, and the last investment represents an annual growth of 16%. And the last pillar is, of course, the consumer and society drive. We know that people are more and more focused on the recyclability of new product. And so we made a scan of the I would say the European manufacturer of sorting equipment, and we were able to find approximately more than 220 companies in Europe, which are small and medium size, so with a revenue between 3 and 55 million euro. So we can say that this market is a very fragmented market currently. Before letting the end to Thomas to talk about our guidance for 24 and our ambition, we can conclude on few takeaways. So for the last years, we have shown that SKAKO has a solid and stable business fundamental. As I explained you, we can see that there are significant growth opportunities in the recycling. We have shown with the acquisition we made with Dartek that we have the ability to make acquisition and to boost our revenue with this acquisition. As I explained you, the market of recycling is still very fragmented, and it represents for us opportunities for merging and acquisition. And as Thomas showed at the beginning of this presentation, we have a very low financial gearing, which means ample financial capacity in order to be able to make some acquisition within the recycling to boost our growth and to make more value with SKAKO. I'll let you. Daniel.
Thank you, Lionel. And then, as the two ending slides, then we will just update and give you a view on our guidance for 2024. As I mentioned earlier, then we see some weak condition in the fastener business, and we see that those will remain for the next 1 to 2 quarters. However, then we also see a recycling customer segment to actually exceed our midterm growth ambition of 10%. And in addition to that, we see the mineral performing and align with our midterm growth ambition of 5%. But based on the very weak market condition in the fastener, then we have decreased our expectations for revenue. Now we expect the organic growth to 2 to 5%, where we previously have had 5 to 9%. But on the other hand, the operating profit before special items, we maintain the guidance that we have on 24 to 28 million Danish kroner, due to that we have actually improved our margins and also looked into how we can maintain or actually lower some of our capacity cost. So the takeout from this is that we maintain our operating profit 24 to 28 million Danish kroner, but we lower our revenue growth for 2024. Then if we look at our ambitions, they were introduced in the annual report, and we maintain, of course, looking into this growth in revenue on approximately 50% over a period until 28. And as Lionel mentioned, from 2020 to 23, we actually had the same growth. So we expect the growth for the next 5 years until 2028 to grow with 50%. It is back end loaded due to that we can see that we are developing recycling very good and is above our midterm targets. The growth that we expect in fastener and minerals is around 5% per annum. And that is still based on a operating profit margin of around 10%. So that was it. Thank you very much. And then let's jump to the questions.
Perfect. Thank you very much, Thomas and Lionel, for running through the numbers here and also doing some deep dives on the vibration business here. There were a question related to this slide actually, because there was someone asking here if you could please comment on the likely future average EBIT margin over a cycle, and if peak margins over a cycle is still approximately around 12% going forward. And I think the question here refers back to sort of the old guidance you had, where you had like an EBIT range, as I recall it, where you had your long-term guidance. Ain't that right, Thomas?
I cannot remember that, but it may be right.
Yeah. But sort of like where should we see it? You have like a 10% stable level during those years, but what would it be within a range, you think?
Yeah, it will be in the range of around 10% every year. It is not back end loaded. We even though that we deliver an EBIT in this quarter with by 7.8%, then we still look into around 10% for the year.
Very good. And if we move one slide back here, I had a question relating to the fastener business. As you also mentioned, Lionel, it was divided into automotive and constructive business, as I recall your rundown here of the fastener business also. And my question goes to like this weakness you're seeing now. I think you indicated that it's more temporary. It's not permanent, but we're also seeing that that sort of like the Chinese car manufacturers are very I don't know if you call it aggressive at the moment, but they have some high ambitions on being sort of like the global manufacturer of at least electrical vehicles going forward. And I think also the export numbers out of China in relation to cars and in the automotive businesses is quite high at the moment. Do you see that as a risk here?
Yeah, as I said, the fastener industry is divided into two industry. The first one is the automotive, as you said, and the second one is in the construction sector. In the construction sector, what we have seen for the last months is a destocking situation made by our customers. So and we think that it will be changed when the stock will be low again. Regarding the automotive sector, we made some investigation about the impact of the electrical vehicle, and we according to what we could see, there will be no impact in terms of for the fastener industry for the electric vehicle, because electric vehicle will need a lot of fastener system like the current car or the petrol car, or what depends how you call it. Regarding the Chinese, we do not see that as a big risk for the European industry, knowing that we have a very strong trademark and strong automotive player in Europe. So we, as you said, we expect it's only a temporary situation, and the thing will be better, I would say, after summer.
Okay, very good. And then there was a sort of a question relating also to your M&A ambitions. As I'll just move back here to the slide you had here with the number of different companies that you have identified, and as you said, that gives you some opportunities for M&A. I think the question here goes to how do you see the potential M&A landscape at the current debt level, as the current debt level should offer some opportunity to do acquisitions, as you have a very low debt level. But I think the thing is that there are some potential targets out there, but how are things priced at the moment, and are the companies in this segment willing to sell, or do they also see the same opportunities within recycling as you do?
It's very, very different from case to case. So it depends of situation of each company. You can find some owners of company who wants to sell for any reason, because it's a family-owned company and there is no one in the family who can or who wants to continue the company. Some of a company as well can be in the situation where, when we were in SKAKO, I would say maybe 8 years ago or something like that, when we had some good equipment, but we have not start to go into the recycling segment. So it can be this kind of company as well. We have good equipment, we can be used in the recycling segment, but they have not started to work really on the recycling segment, and SKAKO can help this kind of company to go into the recycling segment. So yes, it's very, very diversified from case to case, I would say.
Okay, very good. And I'll just move a couple of slides back here. I think it was this one. Maybe we could take a question related to this, because there was a question here, sort of like SKAKO's situation compared to sort of the competitors in the industry. And as you stated here, Lionel, you have quite a diverse and large offering from your side here. But how do you see this compared to sort of the competitors you are facing?
Yeah, the same. I would say, due to the size of our range, we have a very diversified competitive landscape. So there are some competitors which can only make a small part of our range, or maybe they can make only the small equipment. Other one which can make only the big equipment. Some of them are compete us only on, I would say, the mineral segment. Other one could be only on the other segment. But what we can say that we propose a high quality product. Because we believe that compared to the value of one complete plant, our equipment remains with a low cost for a customer. And some of the production of a complete plant can go through one of our equipment. So we think that our customer wants to have high quality equipment, because if there is a problem of one of our type of equipment, it can create a big disaster or a loss for our customer. So we are on a high quality product, and we are facing mainly, our competitors are mainly European companies. It could be as well American, but we do not struggle against a Chinese competitor or a low-cost competitor. That's the only thing I can say, which is a bit general in our competitive landscape. For the rest, as I told you, the competitors are very diversified. It could be larger company than SKAKO, smaller than SKAKO, but more or less all of them are European or American.
Okay, very good. And looking at this slide on the pie chart, you have sort of on the lower left, with the market opportunities around in Europe. Just interesting to hear how much adaptation is needed if you take, for instance, a prototype or something you made for the Spanish market. How easy is it to adapt to like the Italian or the German markets? Sort of like looking at the synergies from this, yeah.
Yeah, something maybe I forgot to mention, that our strategy in the recycling segment is to develop the recycling sector in our revenue in the European market. Why? Because first of all, we have a very strong sales force located in Europe, and secondly, and maybe firstly, that's because all of the European countries share the same rules in terms of recycling. So yeah, sometimes there are some little difference, but it's only small adjustments. So more or less all what we can do in Spain can be made in other European countries. Maybe there are some small technical adjustments, but all of the solutions which were used or which are used in Spain can be used in European countries. And I would say that most of our customer, even in Spain, are OEM customer, and they implement plants and factories all over Europe and even all over the world actually. So absolutely no issue, and that's why that represents for us a big opportunity to expand our model all over Europe.
Sounds very good. Let's take a few last questions. I'll just move back to your P&L. Here it was. Because there was a question related to this result of discontinued activities of 1 million Danish kroner here in Q4. What does that stem from?
That's been from that we divested the concrete activities by end of December. And then we made a approx calculation on how the figures will end up. And then afterward, there was some cost which were related to the transaction. So that is more or less a correction to the result that we had in 2023.
All right, very good. Because the same person also asked here if there are any sort of potential claims from either side in relation to SKAKO Concrete, or is the sort of divestment fully settled as it is now?
Yeah. The divestment of concrete is fully settled.
Good. And also looking at this page, let's take a last question here, because there's someone asking here, are you actively working to increase the level of after sales if margins here are better? And what can you do to sort of improve the level of after sales in total?
Yeah, there are some current action to improve our after sales in the mineral segment, and we are doing that by increasing our level of service in the mineral segment. That's a plan that we are implementing now.
Okay, very good. I think we came through all the questions. Let me just check. Yeah, we are through all the questions. So thank you very much, Lionel and Thomas, for joining us here today and running through the Q1.
Thank
you very much.
And thank you for all of those who participated and asked some good questions. I'll just wish you all a nice day from here. Thank you.
Yeah, have a good day. Yeah.